As we were getting ready for this with open data versus open finance, actually had a little discussion on what is open finance. And you look at these companies, and I'll pass it over to everyone here. I think what we'll get is a very good view of open finance. And you can look at it from Boss Insights, which really came out of the United States, Jesse, JP Morgan, so kind of the big bank perspective, Gabby with Kodat, which came out of the UK. And when you think about Europe, they've had open finance for 10 years, 5 years, whatever that may be. And Lilac, who developed a company in Israel, a bank that's focused on freelancers. So what I thought we'd do with those different perspectives is kind of go down the line, let them introduce themselves and their company, but then really kind of give their view of how they've gotten involved in it and from their unique perspective. So let me pass it on to Karen.
Thank you, John. First off, thank you to all the hardcore Fintech Nexus folks who are in this session right now. Applaud.
Who were told there was a bar, but there is no bar. I apologize.
So Boss Insights is an open finance provider. What we have is a single connection, a single API that gives you access to 90% of the tools that businesses use globally. It's accounting and sales and tax and payroll and KYB, and then an insights engine layered on top, because data needs data scientists unless you can calculate ratios or whatnot. What we say open finance is it's the answer to open banking, which is asking banks to share data out. Whereas open finance is allowing banks and other service providers to get real-time information on their small and medium business customers. And it's information coming from banking data, but also beyond it. Financial statements, tax information, sales information, payroll information. So that's our definition.
Awesome. Jesse Schwartz, and yeah, thanks to everyone who stuck around. So I lead our partner ecosystem and our digital product team at JP Morgan, and interesting discussion on like open finance versus open banking. I agree with kind of how you define it. I think it's basically like data flowing both ways for our clients. And I would say we're super new in this journey. So we'll start understanding over time what becomes more important for our clients. But yeah, fundamentally it's like finding a customer pain point in these different systems that they operate with and making sure it's easier for them to get their day-to-day done.
So I'm Gabby from Kodat, and Kodat is a universal API that connects financial institutions and fintechs to all of the accounting, banking, e-commerce, payment systems that their small business customers use. And one of the main use cases for Kodat is in small business lending, in digitizing that, making it more efficient and expanding access to small businesses. And we're lucky to work with over 100 banks and lenders across the world, including some of our partners like Jesse on the stage today. And I think when we think about open finance, we specifically think about it in the small business space. And when you compare it with the consumer use case, for consumers, open finance really is open banking, because their bank account is really the central system where all of their financial data sits. But small businesses are inherently much more complex. They have their accounting systems, but many other systems as well, where they keep that financial data. And so open finance is both about getting better access to financial services like small business lending, but also about keeping all of those systems in sync and saving the business time and achieving efficiencies in that business.
Hi, I'm Lilac from Lily, and Lily is a banking platform for US small businesses. We're very focused on the small business community, trying to solve the different pain points for that specific segment. And for us, it was about the combination between banking, accounting, invoicing, and taxes. So how do we create a platform that will try to face all of the different challenges a small business owner will have once they start a business, and making sure that they have enough time to focus on the growth of the business and not just on the finance and the operational side. And I think, when we're looking at open finance from our point of view is how do we unlock different experiences for small business owners? So making their lives easier, making data relevant for them so they can take decisions moving forward on their business, and how do we make sure that they feel trust in regards to their business and finances?
So it's interesting as we start to look at open finance. We were talking kind of earlier today, and I was working at MasterCard many decades ago when Yodlee was just coming out and doing screen scraping. And we all thought that it was a technology that the banks would not allow. And then Citibank cut a deal. And they went through and started doing that. And as I started thinking about the evolution of what we've gone through and access to bank transaction data versus access to accounting information versus access to payroll information, you know, I'd love to throw it out to the panel in terms of open finance. Where does it go? I mean, right now we've seen APIs increase. Certainly with the UK, you guys have had this data for 10 years. I think you've had kind of a head start on some of it. But, you know, where do we see it going? How much access will be given to third parties, and how does it benefit them? Anyone?
Yeah, I try to take that. So I actually think this event has been great for kind of spurring a few different ideas. There was a panel yesterday, and someone described it as you basically have the customer, whether it's a consumer or like a small business or a consumer, and they're going through their kind of day-to-day daily pain, and all you're just trying to do is solve something in that situation, like in that context. So the client's not thinking about the data. So I actually wouldn't answer it as like this payroll vertical is going to be really important versus like inventory or something like that. It's probably just like how many different compelling pain points can we solve across different areas, and I would suspect that clients will be willing to share. Like if the pain point is profound enough and we can really solve it, they'll share the data for sure. Like it has to be done in a secure way, but I think they will.
You mentioned that kind of the UK is ahead of some places, and certainly with the legislation, that's true. The last stat I read was that 750,000 small businesses are now using open banking in the UK. But actually, the vast majority of that, the use case that they're using it for is to sync bank account transactions with their accounting platform. And so actually, when you think about all the different ways that it can be used, and specifically, you know, in small business lending, it's still very, very untapped. And within small business lending itself, there are many different workflows that can be automated, many different use cases, even within that, where open finance can be used.
I was just going to, first of all, that's really good news for Lily. If the use case is that they're taking banking and accounting and syncing it. We talk about this so often with the assumption that business owners think about this as deeply as we do. We are all geeks for this stuff. We all live for this stuff and we want to solve it. But usually when you start a business, you're starting a dance studio, you're starting a bakery, you're a doctor, you're not an expert in financial services. And yet, when I was a commercial banker at RBC, they trained me, saying to me that businesses will come to you, they're going to know what they want, and they're going to come to you ready with all of their documentation. And guess how many times out of the thousands of times I dealt with businesses that happened? Anyone want to guess a percentage? Like, this was the percentage. So it's not that open finance is the end, it's the means. If you had access to financial statements in real time, which has been live for years and years and years, when a business comes to you for a loan, which they can only do with a bank 2 years after they launch, by the way, you can actually do more. You can say, and we can get you more interest on your deposits that are just sitting there. We can help you lower your payment fees. So open finance is the method by which you can turn a transactional relationship, a very painfully manual relationship, into one where you, the banker, are explaining to the business owner what they need to do to grow their business, and they just get to go do what they love.
I think one of the areas where we are already seeing some of those implementations is in regards to onboarding to different products. If you'll think about opening an account, it can take less than 10 minutes, which, you know, the process could have taken days in the past and so on. But still, the implementations are really limited. So like accounting and banking, of course, it's one of them, onboarding in a second. But the majority of the processes are still way behind in regards to the gap between the technology and actually the process itself. And we should see more implementations coming, you know, moving forward, because if the goal is actually to solve the pain points, it should happen across different channels.
I just wanted to touch on one of the things that Karen said right there as well, in terms of, you know, small businesses kind of not being so not wanting to or thinking about open finance as much. And I spoke to one of our clients who had recently implemented digital data collection via Kodat versus manually, and she said that actually the specific thing that they struggled with is that when they were collecting statements manually, they had to really explain exactly what they needed, and people didn't know where to find it. They asked for payroll tax information and they gave income tax information, whereas when you connect directly into the systems, the endpoints on the API that you are connecting to, and you can pull that data directly. So I think that's one of the real opportunities.
Yeah, it's a great point. One of the things that I've heard a lot about, and I'm sure everyone here has felt, is all of the PPP fraud. And, fintechs got blamed. Other people got blamed. To me, the reality is the government said, this is all self-reported. So accept the data that gets reported. And I don't know if you guys are following the whole ERC space, Employee Retention Credit. So a lot of these guys up here are working with ERC providers, where what they're doing is pulling information directly from the payroll companies, pulling information directly from the accounting providers, the bank companies, tax returns. So now what you're having is a program that's giving out something like $800 billion. And I think the amount of fraud is extremely low because all of that is verified information. It's a great use case for, third open finance, all this other stuff. Are you guys seeing the same thing with other areas, or are you participating in ERC?
We're all just going to continue to violently agree, I think, on this panel. PPP, who remembers 2020? I want to take us back. Okay? People are singing on balconies and writing movie scripts and learning new languages, and we worked around the clock. And the thing is, when they announced PPP, the acceptance rate of those loans was something at 37%. And when Boston Insights was working with banks, and they were usually community banks who were the heroes of PPP round one, we had an acceptance rate of those loans by the SBA that was 2 times the national average. Because it turns out when you have real-time access to accounting, real-time access to tax, and real-time access to payroll data, you don't have manual errors. And ERC, which is the Employer Retention Tax Credit, in a lot of ways is PPP number 2. Now you have a tax credit that requires the same 3 data sources, and for those who are deploying it this way, you have less errors, and guess what? If you think of this in terms of the whole relationship, the business gets the tax credit, a bank can lend on that tax credit. It's win-win.
Any other use cases, guys, that you're really seeing? What are other places that you're being able to use the data? Are big banks pulling in all the third-party information?
Yeah, it's an area of interest. I would say we're just early in the maturity curve. I think that, as people are saying, like open banking was the first frontier. I think I mentioned this one to you earlier. It's funny when we describe what we're doing in our group and looking at different data connectivity, the example I always have to give is Plaid. So I'll be talking to a senior executive and I'm like, well, like you connect your data via Plaid, probably to Mint or something like that, and then they nod and they're like, oh yeah, that kind of data connectivity. Meanwhile, what we're doing doesn't really have anything to do with that because it's generally speaking like ingesting data. To answer your question on specific use cases, definitely things like onboarding are compelling. Like what we're seeing is most compelling now are really brutal operational processes. So it's not necessarily the sexy or strategic use case for the client, which probably also exists. We've just gotten success by starting with a brutal process. So one example is we've looked at something around card and like the onboarding process to card, and there's a piece of that process where a client, generally speaking, has to fill out an Excel sheet. And we just told the client, like, instead of spending hours and hours filling out the Excel, just connect your data. And then it was like, oh my God, all of a sudden adoption took off. And so yeah, I think it's like finding those processes that are painful for the client.
And I think the other thing that we've seen in the current context is a turn from, we work with many different digital lenders, and back in 2021, it was all about how can we reach more customers, how can we deploy more credit, and the shift to how do we look at our current customers, how do we monitor them more deeply, how can we kind of automate that process of collecting information on a quarterly, on a monthly basis. Some of the people that we speak to are requiring their small business customers to manually send them over statements on a monthly basis, just so that they can be sure that they continue to be creditworthy. And then that's actually people calling those people up and saying, you're late with your statements. So we've seen a kind of more of an emphasis on that side as well.
Can I tell an anecdotal story just based on what you just said? I was on a call with an investor with Wells Fargo, and I was saying exactly that, because who here is a banker that's dealt with actually approving the loans for business customers? Just show of hands. We got 2. Whenever I'm on a call with a banker, we know each other, because you know what? We had to do that manual job, and it sucks. It's the worst. First, you have to approve the loan, and it takes so long. And then when you're doing the annual review, you're approving a loan, and there's no new business. And the investor stopped me, and he said, hey, Wells Fargo, is that true? And they said, it's so true that we deploy an entire team in a third world country to actually do all the scoring for us at both times. And it makes no sense, because the business owner is going to a cloud-based solution, downloading digital information, making it manual, sending it over. And we're all asking the question, why? This can be solved in the same day. So that's the real question. What makes financial institutions adopt?
That's interesting. Lilac, with freelancers, are you seeing a different approach to open finance, or is it the same thing from the standpoint of, you mentioned before, the speed of onboarding and some of the efficiencies you've been able to see?
I think, if you're looking at small business owners in general, from their point of view, they're not that aware of open finance or technologies and so on. From their point of view, it's about the simple processes that they have to do in the day-to-day routines. So if you're looking at it, most of the processes are really connected to the funds flow. So, you have a transaction, you get an income, like maybe it's a payment from an invoice that was due and so on, and then that specific income, you have to take some of it out to pay your taxes, then you have to categorize the transaction, you have to file your reports. Those are all connected transactions, but they are happening in different systems with different vendors in different timing. And I think, one of the goals are actually how do we connect the processes? What can we do to automate the process? Because you have all the data, but you have to log in again and again to different systems, categorize transactions, and see that it's all connected, it's on your reports, you're filing your taxes, you're paying your taxes, and so on. And I think, the goal from our point of view is to connect the different processes, to connect the different transactions, to create just a holistic experience from moment the money hit the account, whether it's in and out, until it actually ends up in a report for an annual audit and so on.
Right. It seems the great use case for AI with a lot of this data is that categorization. Are you using? Yeah.
Yes, all of the, if you look at it from a bank point of view, all of the data is there. So you can categorize a transaction, in 90% of the cases, it will be directly to the specific IRS category, and, the individual doesn't have to do anything. They can override it, but, once they override a transaction, then you understand the pattern, and then you can do that later on. So I think, the fact that we are actually now asking the customer to categorize transactions doesn't make any sense. We can make their lives easier. And I think it also will avoid a lot of errors in the process.
And I think we talked about, still we're at the stage of really getting the basics right and thinking about, manual processes that can be automated. But there is space for the AI piece in that as well. And very similar but related, one of the things that's been the most popular feature of our product is that we're integrated with loan origination systems and partners like nCino. And as part of that, based on the millions of transactions we've seen, we've been able to standardize an SMB's chart of accounts into one standardized thing, which means that can then flow automatically into a spreading tool. So that's a really classic example of kind of a boring problem, a sexy technology that can be used to solve it.
Yeah, we have a partner, Charm has a partner that has built a variety of risk models and realized that the risk models were outdated because the companies that were being modeled were categorized incorrectly. So they were able to just feed the websites through an OpenAI tool and say, hey, based on what you're reading on the website, pick one of the following 10 categories, and was able to then rescore the entire book overnight, which I think would have taken months any other way with some sort of manual thing. So to me, we're kind of, it's 3 phases of the first phase was self-reported. Now we've got open finance, but now you tie in everything that could be done with the huge amount of data that is becoming available. Does that bring other risks? Because now you kind of get into the data privacy, you get into GDPR, you get into other issues of how you protect that data.
I would say the biggest risk when we're moving into digitization is that we lose the actual relationship. It used to be if you were a business, you had a banker, and you knew the branch manager, and they knew you. So you understood if this was a person who had ability to pay and willingness to pay, and you understood if they had a payroll solution that they needed. And now it's all digital. Businesses have 5 to 7 financial relationships. In a post-SVB world, people are spreading out their deposits because they're scared, and they don't have one place to put everything. Now, banking data is great because it's something that's verifiable, but you can take those assets out of the bank account the next second that you show the information. And accounting shows trend analysis. And payment solutions are also verified. You do need to reconcile between all of these data sources to show that there's no fraud, no funny business happening. It's one of the biggest use cases around.
Yeah, I think it's an interesting question. I think, John, you asked, like, when you hit scale of data, are there opportunities for risk? I mean, I think it's always so cliche to say, like, it starts with the customer experience, but if you start with the customer and you're making it clear to them how the data is being used and you're very transparent about it, and then the technology has to follow suit, right? Like, they're connecting their data via secure OAuth connection or whatever the case may be, and then you obviously have the right data retention rules in place. I think that even customers are okay with it. Like, in use cases we've seen, and the vision would be that you have the clients connecting, your sort of first order of business is solving their need. And I mean, that's critical, otherwise they'll never connect. But then, yeah, there is the hope that you have enough data where you're doing things on an anonymized basis, like assessing trends, et cetera, and then obviously playing back value to them. You have to have the scale of data, but yeah, my hypothesis would be that you can get the right controls in place, and you can also have the client okay with that, as long as you're transparent.
And I think that's probably one of the reasons why the most popular use case for open banking for small businesses is in their bank reconciliation, their bank feed, because they feel the pain of doing that every week, every day. And so the value for them is so clear. So I think when we think about lending, it's getting people to share their data and getting small businesses bought into that is about being really, really clear on the value that they're getting from that. We recently actually did some research into what are the best incentives to get small businesses to share their data. And the number one thing was a better interest rate. And that was closely followed by quicker approval or quicker access to cash. So if you can, in that process, say, by sharing this data with me in this way, this is what you'll get, then that's, I think, the key to tackling that.
And do you think that answers the question why I think different people have had different experiences with tokenization? That maybe their business case wasn't strong enough for the business to trust them, or maybe they didn't have a brand that the business could trust to actually go in and say, no, I'm going to give you access to my accounting information. Yeah.
Absolutely. We actually did this exercise where we looked at all of the linking journeys of some of our clients and compared them, and we saw who had the best link rates at the end of that. And we found, I think, we've actually published this all in our docs, but we found kind of 5 factors that really made the difference. And some of them was kind of actually getting people not just consent to share the data, but actively consent into that security piece. And another one was how they laid out what the small business was going to get, not just getting to the next stage, but doing it more quickly, for example.
I think, if you're looking at it, on the U.S. economy, the trust is there. So, like, the fintech industry wasn't successful if trust wasn't there embedded from day one. So the fact that customers were actually opening an account online with a brand that they don't know, it's not Chase, it's not Bank of America, it's fintech brands that are, might be known in a specific community, but, overall they're not that well known, and people are still trusting them, and they're opening an account, and whether it's consumer or small business. I think, overall trust is there, and if the value is really clear, people will take the effort of actually sharing data, doing whatever needs to be done, to get access to the specific tool and services, if the value is there. If it's not, I don't think it's a trust issue. It's almost always the value issue.
I think we always have to go back to the fact that we think about this industry different, and we're not exactly as user-focused as we think we are, because a business customer will connect data if you solve their problem. We are creatures of convenience, and all they want is an Amazon-like experience to get access to what they need.
Definitely.
We don't think actually it's because of rate sensitivity. It's because they want to see their cash position in one place, collect all their systems, put it in one place, like Lily was saying, and they don't want to have to put effort into that, so they know what they need to know in order to grow. If you're the financial institution or the fintech that's going to help them with that, they'll work with you. And if not, they will go elsewhere. Business owners are not rate sensitive. They're actually much more sticky clients. That's why it's so win-win for financial institutions who want to solve this. And they get the solutions done 80% faster. They see 34% increased engagement. The stats are all there. It's just, I had a fundamental moment where I realized how different businesses think than we do, and it was at an MX conference when Will.i.am from the Black Eyed Peas was speaking, and he said, I think we can all agree that's an above average business owner, right? He was taking names, right? So 20 years ago, when he was in his early 20s, he was saving money to buy his mom a house. So also, good dude. He had $400,000 saved. That is really impressive. He was saving it in checks in his glove compartment. Now, you can call that a trust issue. You can call it a financial education issue. Whatever you're calling it, we're not meeting businesses where they are. They have been shown by research, by MasterCard, who has access to more financial transactions than all of us put together, right? That they are not rate sensitive, they want convenience, and the number one thing they want to know is how much money they have to play with so they can grow their business. If we solve that for them, they will engage.
I think it's actually creating an opportunity for financial institutions to do more. So like if you think of banks, they've been doing that for many, many years, mainly on the same products, like, looking at product evolution, deposits, lending, credit, and so on. But now, they have access to so much data, they can actually do more. If you're thinking about us, we're not just doing banking, we're doing bookkeeping and accounting and taxes. Everybody can do that. Like the data is there, they can develop the relationship, develop the processes. It doesn't have to be silos, like I'm just doing that and he's just doing that. Like, the access to data is actually creating different opportunities for us to do more.
I think that's fair. I think that's something that a lot, not just fintech, but a lot of tech companies have shown the consumer experiences have become so good, and we're all using those in our day-to-day, that as banks, we realize that if you're just offering the same financial products, those are for the most part totally commoditized. And so we have to have, I don't think we yet have the secret sauce of like exactly what you have to offer so that you're adding enough value, but it's certainly like a compelling customer experience. It's probably driven by quite a bit of data that we have, greater personalization, as we're saying, like making some of these experiences more seamless. But yeah, it's certainly not just on kind of standard financial product offering.
Yeah, interesting stuff. Any questions, guys? We'll keep on talking, but if you do have any questions, raise your hand. We'll see if we can see anyone. Others a hand up or no? No? Sol, no question? Oh, there we go.
Try to be loud enough for everyone to hear me. As you're working with partners, whether it's the large financial institutions or earlier stage businesses, who's doing it right? Other than the folks on stage, who have you seen that is doing this right and really meeting customers where they are and meeting their needs when they need them?
Great question. Let me just repeat it. So the question was, who's doing it right versus who's sitting on stage. So what companies would you guys pick, and what are the examples of someone who's really doing it right in the open finance space in terms of access? Was that, or you want how they actually use the, okay, perfect.
Okay, so we have companies who just want to do things faster, cheaper, better. I want to lend 50% faster. I want to do renewals 80% faster. And that's sort of, okay, so you've entered the game of digitization. And then you have banks that will say, I want to serve the whole relationship. Banks, by their very nature, are very segmented and product focused, so it's actually an incredible feat for them to think about, I have access to financial statements, and I'm going to use them beyond helping somebody get a payment done. I'm actually going to go to them and say, hey, I can get you insurance faster, and I can help you with wealth management, and I'll help you with loans. So I'm going to serve the whole individual. But what's really, really exciting is when a fintech or a bank will say to you, I actually don't even know why we're scoring and decisioning things the way we're doing it. Every decision I make about a business, I only look at that one business. I'm not looking at industry insights. I'm not educating my business owners on what they can do in order to grow. I'm not educating my employees on what they need to do to move the industry forward. And those players that we get to work with are so exciting because they want to start right away and they want to be doing something different in 3 months and 6 months and 9 months just to get their business owners ahead. When you think about it, in my time as a commercial banker, I served 3,000 businesses. That's a sample size, and I have no idea how one business compared to the other. Why aren't we telling business owners, you're getting payments slower than everyone else, here's how we're going to help you? So the FIs and fintechs who are doing that are leading the charge.
Yeah, it's an interesting point. I think that that's actually partly why it's such a no-brainer that clients are willing in these situations to share. That when we get kind of stuck on the question to ourselves of like, will a client share data for this and that? And that is, I agree as well that it's a conversation or a topic that we have as product people. It's not a conversation that the clients are necessarily having. But yeah, the minute you have access to data, you're offering such a better experience. Like I think we chatted earlier, Karen, that a lot of times people wonder, well, should we be offering personalized products to clients? Because if we're offering products, then we're just being annoying and we're marketing to clients. And that doesn't bear out in the research at all. In fact, every time we speak with clients, they're like, well, we know you have a lot of products as a bank, but we certainly don't know like what products are right for us. And so the opportunity, I think we're all agreeing on this, like the opportunities are so ripe to get access to that client's data, understand them better, offer compelling solutions at the right time as well. So yeah, a lot of opportunities.
I think some of the most interesting examples that we see are where fintech providers go for a really niche vertical and get really deep into that industry and then start to expand their product set to provide more financial services to a business. So, Toast is probably the most well-known example, who started with payments and now have, you can buy your supplies and things like that. And the amazing thing about that, not only are they able to build out this really deep expertise, but it's kind of a virtuous circle, because if they can then offer capital to that business, that business can then grow faster. They have more payments that they're also making money out of. And so I think that is something we're seeing extensively, new businesses being formed. We work with a client who has built an operating system for cemeteries and for veterinary surgeries, and that's a massive trend that we're seeing.
I think, from my point of view, if you can look at categories that are doing it, or, trying to face all of the different challenges. So the neobank industry is doing that very good in regards to onboarding, opening accounts, and so on. I think the SMB lenders are also doing a very good job in regards to underwriting, making sure that the process to actually get a loan is faster, the process to actually get your payments are faster. But there are still a lot of industries that are way behind. So I think, the overall trend is really, really new. So like if you look at it, it will take a few years to adapt in regards to different processes, but we're still seeing a lot of different implementations that are really good.
Yeah. When I think of companies, I think of Square, Stripe.
Yeah.
I think of QuickBooks in terms of the integration of multiple different things and the ability to offer instant lending. I think from the standpoint of scoring, I'll have you in one sec. From the standpoint of scoring, things that were done a decade ago on the consumer lending side to be able to give an instant offer, I think were not possible on the small business side, and they now will be possible because of open finance. But, yep.
I'm wondering if Chase is using any of these services on the stage, and if a similar type of service, and what use case are you doing?
Yeah, I probably can't go into a lot of detail, but yes, we're doing, we're looking at data aggregation and data ingestion specifically. And right now we're looking at things related to card, basically simplifying the card experience and sort of like the onboarding experience for card. there's aspects of it that are really painful for the client, like for instance, providing lists of suppliers for card, but can't go much deeper there.
Jesse is going to need you all to sign an NDA now before you leave the room.
Exactly. So,
Yeah, I have a basic question. I'm very familiar with consumer lending, and the golden rule is everything you do is with the credit bureaus. So lenders have to report back to the credit bureau. Why is it that we don't have something similar to that in the small business universe?
so did everyone hear the question? Why on the consumer side are lenders required to report to the bureaus, but that's not the case on the business side, is it, right? Yep.
So I've never heard that question before, and it's such a good question, so thank you. The truth is that you do have credit bureaus doing small business scoring.
Poorly.
But I am, again, going to very much agree because what we have is thin credit files. When I was working as a banker, the first thing you would do is meet a business, and then you'd ask them for their internal information. Tell me that your business is healthy enough to borrow money. And then the last thing you would do is go and get a credit score. Now you have Dun & Bradstreet, you have FICO, you have Equifax, TransUnion, they all have versions of credit scores, but you have something called a thin credit file. The analogy would be, there's a Karen at Boss Insights, and she's making her payments on time. And that's all you have, and maybe not even that. And you cannot make a lending decision on that. But stay tuned.
Yeah, but a bigger problem is if I have a business, I can open 3 bank accounts, I can borrow from 3 different lenders. So how is the third lender going to know what's my ability to pay or not?
You do know because you have something called a general service, now I'm getting all like geeky, but you have a general service agreement, and that's reported to every single bank.
Okay, but I'll disagree slightly as a person who ran a big small business lender. They don't solve, and it's stacking. And you end up having a lender who goes out with one line of credit, and the requirement to the business is that they don't take any other money, and then they take a merchant cash advance from somebody else, and they take something. So it's an issue in the industry, totally.
Is there any initiative?
There is. There's a small business financial group. There's a whole bunch of reporting groups that are trying to solve it. But as far as I'm concerned personally, nobody has solved it yet. And there isn't a solution from the standpoint of the bureaus. The solution that I'm seeing lenders put in place is open finance. So what they're doing, well, or do they need to? Because what you see small business lenders doing is pulling bank transactions, and they'll say, I want to see all your transactions for the past 3 months. Well, I see that you made payments to this lender and this lender and this lender. Why didn't you report that to me? So they're calculating it themselves. So there are a lot of providers, and what some of these guys do on the stage already is they are providing reports to say, hey, guess what? When we look at your financials, which they'll give to the small business lender, we're seeing that this business may have a $200,000 merchant cash advance. They may have this. You might want to ask questions. So that's some of the stuff that goes on behind the scenes.
That's the value of aggregators, right? That's the value of aggregators being plugged in on a consistent basis, so then you can observe these triggers of other payments being made from business bank account, and it'll tell you which stacking has occurred, right?
One lender decides not to be part of that.
Well, no, because if a lender is utilizing access to data and bank account information, and the merchant, by virtue of working with that lender, has allowed access, and that's mandatory, then you do have access.
Yeah, that's a great point. I think the more connectivity you have and the more commonplace it becomes, you can see, to your point, you could see repayment of other financial institutions in there, and you'd immediately say, well, what's happening here? Now, you would probably say you might not catch it right away, and you might not catch it every time, but I do think greater connectivity, more commonplace connectivity, at some point, it might be required to have your data connected in certain pockets, in which case, like, you have an ecosystem with a lot more transparency around that type of thing.
We've actually looked at tackling that problem specifically with a new kind of report out of our API called a debt report, where you can, where it surfaces from the accounting data the various and looks for the details on different loans that might be stacked. So yeah, it's an interesting area.
But it's a workaround. We credit to you. for
It
bringing
is.
that up. It's a workaround
We lived
versus,
this problem in 2008, and it took us like 5 years to solve it.
Yeah, but I don't believe it's a workaround. The credit bureaus don't have a solution. This is the solution.
What I'm saying to you is that there's a lot of discussions behind the scenes with people. Credit bureaus have the brand, right? and people want to purchase from a credit bureau. But these are large organizations, and it's very difficult for them to move things forward quickly. Agile fintechs, who are data aggregators, already have this solved. It's where does a financial institution want to buy this from? This could be solved tomorrow. There's no issue because you can see immediately in an accounting accident. So it's state ... right?
Knowledge-wise,
Yeah.
you guys are there.
Yeah.
I think it's the rule that is not there. So every lender should report once they give a loan to someone.
You are now the spokesperson for our whole industry.
Or, I mean, but then you take the assumption that you want to put this in somebody else's hands, as opposed to bank transactions you can look at. You can build an AI engine that goes back and says, hey, we're seeing that you borrowed, and now you have instant real-time information. You put it in the place of the credit bureaus and the reporting systems, so it's reported monthly. Great. What happens over the course of the last month if they took multiple deals? So to me, it's putting the hands in the fintechs who have the intelligence to build the algorithms, to build the systems, which clearly, yeah.
Okay, I hate to jump in here, guys.
Finish this
It
over
obviously
drinks.
was a very good question, so
Juiciest
too
part
bad
of
we're
the
out of
panel.
time. But our thanks to our panelists. This was an excellent discussion, and thank you for attending here to the bitter end.